Well, thank you very much. The presentation today, what I'm going to focus on very much is the strategy of Rafaella Resources. We started out a couple of years ago with the acquisition of a single project, a tungsten and tin project in northern Spain, and we spent 2 years getting to know the geology, the lay of the land, the metallurgy, etc. And then recently, what we've done is kicked off a strategy, which is a consolidation of the region to really build a position, strategic position, recognizing geopolitical events and demand, supply conditions, etc. So I'm going to spend some time going through that today, and then wrap up with a look at the portfolio. So start off with the disclaimer, and let's talk about the strategy. So the strategy is to be a leading supplier of critical metals from low-risk jurisdictions. What that means is we're looking to source projects in areas where we believe we can take projects through to production, low-risk political jurisdictions that can supply into markets that require these critical metals, but suffer from or are exposed to significant supply chain risk. In doing that, we're looking to build a portfolio of critical mass. Obviously, geopolitical landscape is changing. The last presentation obviously spent a lot of time looking at that with the issue of Ukraine, and that's very much relevant in our portfolio as well. We're going to look at projects with known resources. We're not really looking to take greenfield exploration going forward. It's really looking at known resources, but with upside, permitted where possible, established mining jurisdictions. Existing infrastructure is important as that brings down not only pre-production capex, but it also brings down the time to get into production. And then a key plank to all this is our environmental and social governance. Where possible, we will look to source sustainable energy, reduce our operations to a neutral or zero carbon footprint by applying not only renewable energy, but also latest mining and processing techniques. And ultimately to make sure that whatever operation we take on will leave a positive legacy for future generations. And that means taking an existing site, often a brownfield that may have residual issues such as exposed or open drill holes or areas that need tidying up. We'll, as part of our development, clean up legacy items, manage the environment going forward, invest locally, and the intention is to demonstrate ourselves as a responsible modern miner. All right, so let's have a look at the actual strategy. Our focus is really looking at those commodities that are most impacted by the changing technological economies, technologically driven economies. Tin and tungsten are our primary focus. We also have exposure to nickel, copper, and some cobalt. An example of the changing dynamics are the electric vehicle, for example. Tin plays a significant part in the manufacturing of vehicles, but so does tungsten. And I'll come on to a little more detail about tungsten, but Europe and the Americas produce 22% or 42%, sorry, of global car production, and both these metals are critical in those economies. So tungsten is a key component in the manufacturing of automobile engines due to its ability to its abrasive resistance, its ability to drill and be used in heavy tooling. So we'll dive a little deeper into tungsten. A critical metal is defined by the European Union as one having economic importance and at the same time supply risk. Tungsten is clearly critical to the economies of sort of modern economies, as it's fundamental to automobile manufacture, as I've mentioned, in heavy machine tooling, but it's also critical in the mining and the oil and gas space. It's used extensively in drill bits. Its density makes it particularly applicable as well in aerospace applications such as gyro control and satellites. It's used in medical appliances and defense. Normally, during geopolitical risk, unrest, we see the price of tungsten go up. It's used in armor-piercing weapons and tank armor. So it's got an application there as well. So in any modern economy, tungsten is certainly a critical element. And then on the supply side, the European Union identifies various supply risks in their analysis and paper that's released every couple of years. And they define supply risk as country level concentration of the production of primary raw materials. Tungsten is dominated by supply out of China. Around 85 to 90% of tungsten comes out of China. Governance of supplier countries is critical. 95% comes from China, Russia, and Vietnam. And in fact, Russia produces about 1,500 tons of tungsten per annum, and all that flows into Europe. So given the current situation, certainly there's going to be a change in that going forward, we would expect. The opportunity for recycling, the European Commission is looking at addressing supply chain concerns by encouraging recycling, but really has limited application in tungsten. And then obviously import reliance and trade restrictions in third countries. Well, again, we come back to the Russia-Ukraine situation. Clearly, that's a significant risk for tungsten. So if we look at global demand, as I mentioned, 95% comes from China, Russia, and Vietnam. Only about 4,500 tons comes from other sources, and yet the demand in Europe, US, and Japan is 22,000 tons per annum. So there's clearly a significant gap between what is required in Europe, US, and Japan versus what they supply domestically. And this is really the focus of Rafaella, is can we help to plug some of that supply gap by providing an alternative to these regions such as Russia, China, and Vietnam. Where is the supply of tungsten going to come from? Well, that's a good question. China is closing down their smaller operations. Many producers in Europe are operating well below their nameplate capacity. We have projects in Spain, for example, Barco Pardo and La Paria, both having operational issues. The Hamerden project down in the UK started up and then went into liquidation and is looking to restart. So there are very few projects around, few projects coming on stream. And with the portfolio that Rafaella Resources is building, we believe that we can put ourselves in a position to supply up to a third of Europe's requirements within about 5 years. If we look at tin actually shares some of the similar risks to tungsten. It's dominated by supply out of a few players, in this case, China, Indonesia, and Peru. And we have seen supply chain disruptions within the tin market where there have been problems around shipping and difficulties in moving the tin across to the market in the United States and Europe, which has led to all-time highs on those premiums, with prices increasing nearly 100% over the last 12 months. So what we're seeing in tin, we believe, are very real risks being faced in the tungsten market. Coming to environmental, social, and governance, I mentioned that this is a key plank to any project that we undertake, and that we would look to leave a positive legacy for future generations, which means we invest heavily in the local market. In mining, typically say a 3 to 4 ratio of jobs being created for every direct job at site. We are looking to develop a number of mines in Spain and Portugal, which will lead to significant investment and job creation in those communities. Not only that, as I mentioned, we look to access sustainable energy where we can, and we've signed up with a leading energy company called Capital Energy to supply renewable energy to our mine sites as we develop those. We're also members of some important organizations here in Europe who promote significantly the concept of sustainable mining. So let's have a look at our portfolio. Our portfolio, we have currently 2 projects in Spain, Santa Comba and San Finks, tin tungsten projects. They are well positioned to supply Europe and North America. As you can see, they're close to ports. and they have an existing infrastructure site, and they are both these projects have previously produced. Baralha and Vila Verde are two projects in northern Portugal we're in the process of acquiring. That will give us 4 projects in the same geological belt, all relatively close to each other, offering significant synergies, logistical, human resource synergies, capital synergies. We'll be able to stagger those projects as we bring them on stream, and therefore minimize any capital drawdown requirements as we are able to recycle operating cash flows into the project. And then in Canada, we do have some exposure to some battery metals, nickel, copper, and cobalt, through a high impact exploration project called Midram La Force. And that's, I'll come on and explain what we're doing there as well shortly. But let's look at Santa Comba. So Santa Comba is the first project we acquired. We spent about 2.5 years working on that. We took a project that had a very small inferred resource, and we've drilled it out quite extensively. We've increased that to significant amount. 87% of our resource now sits in measured indicated. We're in the process of completing a feasibility study. We're also going to shortly submit a open pit permit application. We already have an underground permit application and a process plant application, and on the back of that, we've already started some work on the underground. There's a picture of that on the right-hand side, and we've put in place a pilot plant to do some early processing work on that underground work, on that underground resource. We've completed our metallurgical test work that shows that we can get very good recoveries, and importantly at Santa Comba, there is significant potential for scale. So although we have around 19,000 tons of tungsten in our resource, we have the ability to take that up significantly, as you can see here, to significant targets that have been identified both on the surface and on the underground that could significantly increase the size of this project over time. We've only drilled out around 10% of the near surface mineralization. So there's significant upside here, and one that we'll continue to pursue. So we would expect this mine to run for many, many years. We look at San Finks. San Finks we acquired recently at the beginning of the year. It was producing as late as 2017. There's a plant in place, although there is some investment required there. And we're pending to restart this mine is pending the award of water discharge permit that is well advanced. So that is a mine that we picked up recently. It's high grade underground with a focus more on tin than tungsten, and one that complements very nicely the project of Santa Comba. And then in Portugal, we've signed a binding heads of agreement to acquire 2 projects, the Baralha and Vila Verde projects. Both of these were previously operating as well, shut in the 1980s. They were the second and third largest tungsten mines in Portugal when they shut down. And Baralha has a exploitation permit recently awarded of 25 years plus 2 15-year extensions. And Vila Verde is in the process of applying for an experimental license, which is one down from an exploitation license. So these are both projects that have previously produced, have access to infrastructure, have significant upside potential. And in fact, in the case of Vila Verde, potentially we may see that it's got other minerals as well that we could bring into production. The acquisition terms about 4 million euros, but that's subject to a JORC resource report being produced on Baralha. And the that's up to 25,000 tons of tungsten, and that compares to our resource at Santa Comba of over 18,000 tons. So if we look at the projects, there truly is an interesting portfolio here that is staggered in terms of its developments. So we're not looking to bring on 4 projects at once. We're actually looking to bring on 1, and every one after that comes on around 12 months later. So we initially San Finks, followed most likely by Santa Comba, and then sometime after that Baralha. So it does allow us to stagger our efforts, apply our team across these projects in a much more efficient way, and very important, as I mentioned, minimize our capital drawdown as we bring on one project and then recycle those cash flows into the portfolio. If we look at Canada, Canada is a high impact exploration opportunity play. We've got exposure to nickel and copper. Midram La Force are two projects that have extremely high grade intercepts, all shallow. We've done quite a lot of work in 2021 on some low frequency surveys to identify deeper anomalies, and we've done that. We've produced a report that's compliant with the 43101 in Canada, and we're currently in discussions with third parties as a means of funding up to a 2 million exploration program this year that will allow us to raise money at the local level, which is a lot more efficient, drill out that resource whilst maintaining that exposure, that upside to existing Rafaella Resource shareholders. So why Rafaella Resources? We've got a portfolio which we think is strategically well placed to supply critical metals from low-risk jurisdictions into markets that have significant supply chain risk exposure. We think as a consequence of that, the forecast for tin and tungsten is very bullish, and the attraction of Rafaella Resources as supplier of choice is certainly there for these off-takers. And then we have a high-impact exploration portfolio in Canada, which we're currently looking to raise money at a local level to drill that out this year, which provides some really exciting news flow for us over the next 6 to 12 months. Quick corporate snapshot. We have 220 million shares out there. We have a number of options, which quite a few of them are actually going to expire in late 2022. We've got cash in. We just did a placement of $2 million that was oversubscribed, and we have a small and experienced board that's very much focused on supporting and pushing forward this strategy. I'll leave that now and open up the floor for any questions.
Excellent. Thanks, Steve. Well, your contact details are up on the screen, but for the people who wanted to ask questions now, we had one person ask, when will RFR start to produce tungsten?
Well, it comes back to the slide here. Here we go. So look, these timetables are subject to change, obviously. We have to go through permitting processes. We have to complete various study works and drilling programs. So this can obviously move, but this is a best estimate at this point in time. If you look at Santa Comba, what we're doing is we're applying for the Santa Comba project to be an industrial strategic project, which puts it onto a fast tracking process. Okay. And the estimate under the fast track process, permitting is supposed to take 18 months, which is why we have 18 months on this schedule. The Sand Finks project is subject to the water discharge permit. Now we've put in there the maximum time period that we expect it to take. It could take less, and if it does, then we'll get into development sooner. But we've tried to show a realistic picture of what the production profiles do look like, or the timing. Obviously, we're working to accelerate those as much as possible and deliver sooner if we can. But I think this schedule is probably a realistic picture given stipulated timeframes.
Yeah, thanks for that. Albert, who seems to be, pretty well acquainted with the story, is asking about offtake agreements, and how those conversations are going with offtake partners.
Yes, we've kicked off offtake discussions with quite a number of parties. We've discussing both with traders, and we're also discussing with end users, both in North America and in Europe. There's been a very positive feedback. One thing that we've been pushing for is more of a portfolio style offtake. So we'd like to see offtake potentially cover Santa Comba and Sand Finks, for example. There is appetite and offers for Sand Finks offtake at the moment, but what we're doing is we're waiting on the Santa Comba feasibility study to come out to see if we can actually combine those offtakes into a single offtake sort of package. So those discussions are underway. There's a lot of appetite, there's a lot of interest. What we offer off-takers, which is quite interesting, is on San Finks, it's a tungsten concentrate. In Santa Comba, it is a calcium tungstate or synthetic scheelite, which is also very attractive for end users and off-takers that go on to produce ammonia paratungstate, which is the benchmark, which is the product that's used ultimately and beneficiate into tungsten carbide, etc. And then we'll also be supplying some tin concentrate. So we do provide a variety of products which fit quite well from what we understand with end users and their requirements.
Good to hear. I think anybody who's considering investing as well, they want to know, and given the recent capital raise as well, they'd probably be interested to find out, what's the percentage spend between each jurisdiction, should I say, or the percentage spend split between each type of asset? Is it 50-50? What's the current burn rate at the moment as well?
Okay, so our burn rate's been quite high up until now because we've been doing a significant amount of work on the Santa Comba to get the feasibility study complete, and also the studies necessary for an open pit permit. Those have pretty much completed now. So our burn rates come down significantly. In fact, really it's not a lot more than just the ongoing support of our team on the ground. We have a small geological team and some mining engineers that look after Santa Comba and San Finks. Most of the work that we're doing now is moving in-house. So our third-party costs are coming down significantly. So what with Santa Comba, we've been spending around $400,000 a quarter. We expect that to come down. The total burn rate's about $150,000 a month for the entire company. So it's significantly less going forward. Most of the money has been spent on Santa Comba. That's going to shift as the team starts to focus on San Finks now. Once the open pit permit application has been submitted for Santa Comba, really the focus will be on San Finks and preparing that project in terms of the mine planning and how to develop that going forward. So we're in a period now where cost and spend rate has come down significantly compared to previous quarters.
All right. I think most people are, comfortable and familiar with the mining jurisdiction of Canada, but can you tell us a little bit more about, the mining and environmental permitting processes that, RFR would have to go through in Spain?
Yeah, okay. So in Spain, the laws are set centrally, but they're governed by the local provinces. So in our case, both Santa Comba and San Finks sit in the province or autonomy of Galicia. So Galicia is where we have our discussions and our permitting goes through there. In the case of Santa Comba, it has an underground permit and a process plant permit. It does require an open pit permit for us to develop both the open pit and the underground. So that, as I mentioned, we're going through that application, and we're going to start that application process. And there are a number of avenues. We've elected to go through the strategic industrial project route, which, as I say, fast tracks that permitting process. And we're picking that route because we'll be a significant investor in the region, and we'll tick the various boxes to qualify for that in terms of capital spend, jobs created, etc. The tied in with the open pit permit is some environmental study as well, which has also been completed. San Finks is already permitted. It's already got an approved mining plan. It's got the underground permit. It does require a water discharge permit to continue mining, so that it can pump out water and treat the water in some of the lower levels, and that is well advanced. And in fact, the seller of San Finks, Sacyr, which is a large Spanish construction company, is working with us. So they have not just walked away from the project; they're actually working with us to help us get that water discharge permit through. And their remuneration or consideration on this project is all deferred and payable out in production royalties. So they're heavily incentivized to work with us and get that permit in place. So there is a well-defined permitting process in Spain. There are plenty of mines operating in Spain. We saw Sandfire recently acquire the Aguas Tenidas project in Andalusia, and that's a significant investment in Spain. But there's plenty of mines up and running. Spain has a very long mining tradition, dating right back to the Romans. So it's a very familiar mining jurisdiction for those operating here.